The ETH merge this September. What to expect? It's been a long time coming, but one of the most important cryptocurrency events of the year is just weeks away. Ethereum developers have verified that the merge will be happening this September. The merge will transition Ethereum from the energy-intensive proof-of-work validation methodology to a more environmentally friendly proof-of-stake mechanism. With billions of dollars invested in Ethereum's ecosystem, there's a lot on the line for ETH holders and developers that use the network. Welcome to Skillset, your one-stop shop for all finance, business, marketing and money issues. Of course, the crypto, NFTs and metaverse. And all blockchain-related topics are not left out. We are a group passionate about seeing you educated about those topics. But we promise to keep entertaining you, so kindly like and share this video if you find it helpful. Also, smash that subscribe button for more videos like this. Now, what is the merge all about? The Ethereum blockchain is a technical framework that allows many Web3 applications, crypto and NFT initiatives to exist. Basically, the merge, also known as Ethereum 2.0, ETH2 or ETH 2.0, is an upgrade to the Ethereum blockchain that will lessen its environmental effect and boost network security. It will also allow Ethereum developers to implement new features and increase the chain's scalability. So what exactly is the merge? The upgrade will merge the Ethereum mainnet blockchain with a beacon chain, a rival network developed in 2020 that has since been functioning in parallel with Ethereum. The Ethereum mainnet is what developers refer to as the blockchain network's execution layer. Execution layers give you the ability to carry out a transaction. They provide a home for applications and perform related transactions. Think of it as the engineering that enables data transfers on the blockchain. The beacon chain is the system's consensus layer. Again, the clue is in the name. This layer is responsible for network rule enforcement, verifying or invalidating transactions that want to occur at the execution layer. Because blockchains are basically decentralized public ledgers, they need a method to verify or invalidate transactions that occur within them. While ensuring that no one forges a transaction on that public ledger and steals cryptocurrencies or NFTs that do not belong to them, most computers must agree on the transaction's legitimacy. This is how a blockchain regulates itself without a third party. The Ethereum mainnet currently validates transactions using a mechanism known as proof of work. However, by combining with the beacon chain, Ethereum can abandon its POW consensus algorithm in favor of a new approach known as proof of stake. That's a big deal. What is proof of work? Proof of work is one of the primary reasons why blockchain technology has a less than stellar environmental reputation. In terms of electrical energy usage, the Bitcoin and Ethereum blockchains consume more than 317 terawatts each year, putting them squarely between Italy and the United Kingdom. The POW consensus mechanism, which involves complex and energy-intensive calculation, is responsible for the vast energy consumption, a process known as mining. To mine network nodes, which frequently take the shape of massive servers that can span whole warehouses, solve complicated mathematical problems based on cryptographic algorithms. By design, the process consumes a lot of energy, therefore requiring resource-intensive computational operations to use the ledger discourages people from doing so. And how is proof of stake different? Proof of stake consensus, which the beacon chain will add to Ethereum, is orders of magnitude less energy consuming than POW, exactly 99.95% less intensive. This is because POS does not require network nodes to do complex calculations. Instead, it assures network security by requiring users to stake a certain amount of their crypto in the hopes that the system will randomly select them as block validators. But is it really possible to reduce energy consumption by that much? We'll just have to wait and find out. How will the Ethereum merge play out? Developers have finished all testnet updates and are now ready to launch the merge on the mainnet. The switch is activated in 2 stages. First, on September 6, a network upgrade known as Bellatrix was released. The Paris makeover will follow. This will occur between September 10 and September 20. Simply put, the new merged chain must reach a point where it is no longer vulnerable to attack before the team can fully activate the merge. Why is the merge important? Only second to Bitcoin, Ethereum is one of the most popular blockchains in the world, with a market valuation of about $190 billion. Aside from the millions of NFTs that the blockchain authenticates, the blockchain is essential to the operation of countless other decentralized apps and financial systems. As a result, millions are affected by what happens to the network. Aside from the environmental benefits of converting to proof of stake, there are certain advantages like the barrier to entry for people who wish to engage in the staking community. Where crypto mining necessitates using expensive equipment to solve cryptographically rooted issues, staking does not. Instead, you only need a reliable laptop to do the job. This could imply that more people will be able to act as validators in Ethereum, further decentralizing it. Another consideration is security. There are grounds to assume that the merger will make Ethereum more secure, yet every coin has two sides. To mitigate any security risk, a procedure known as slashing occurs in which a validator loses his staked tokens. If a group obtains the 51% staked ETH required to begin tampering with the ledger, which would be extremely difficult to do, the network can slash their tokens, rendering the entire endeavor futile. Because you can't slash a miner's GPU crypto mining equipment, this mechanism for rewarding good behavior doesn't exist in proof-of-work systems. The blockchain also represents the crypto and NFT movements and Web3. A successful merge will contribute a much-needed boost to an ecosystem suffering from yet another crypto winter. However, while many people see the merge as a huge triumph for Ethereum and its environmental impact, not everyone is thrilled. The change will immediately affect the many ETH miners who earn money by conducting POW computations worldwide. Their existence will be rendered obsolete as a result of the merge. Will there be an ETH Hard Fork? The network might split if those angry Ethereum miners can muster enough support to keep running a proof-of-work version of Ethereum. A blockchain fork is a network split in which the now two chains share the same ledger history but proceed in opposite directions following the separation. When these forks occur, whether as a result of widespread opposition or a hacking event, digital assets may be duplicated. This was the situation in June 2016 when hostile actors hacked DAO, a decentralized autonomous organization that had started on Ethereum early that year. Before the theft, DAO raised $150 million in ETH via a token sale. Still, hackers could siphon off roughly $60 million before Ethereum conducted a hard fork, rolling back the blockchain's history to shortly before the DAO heist. The network also reallocated the DAO's ETH, allowing investors to withdraw their assets. Admittedly, it was an incredibly centralized action for the apparently decentralized chain. Still, it was one that the Ethereum community had little choice but to make in the face of the awful circumstances. Interestingly, the hackers could preserve their loot on their forked chain, which became known as Ethereum Classic. What investors can expect? If you're a long-term Ethereum investor, the merge is a significant step towards making crypto more sustainable, scalable, and safe. Ethereum was the first cryptocurrency to apply smart contracts and continues to dominate the industry. However, it suffers from network congestion and high gas prices, which will be addressed in the next major upgrade, sharding. You might be tempted to buy or sell Ethereum in the coming weeks to profit from the price swings connected to the merge. The problem is that it's impossible to predict what will happen, which makes this sort of trading exceedingly dangerous. We believe in long-term investing rather than timing the market. However, let's talk about the reasons why there could be a short-term volatility. Number one, there are very high expectations. The price of Ethereum has significantly increased in recent months, owing primarily to pre-merge speculation. Many people believe that Ethereum merger will cut gas fees. It won't. It will also not speed up transactions. When reality fails to meet expectations, the price of ETH may suffer. On the other hand, Vitalik Buterin, the creator of Ethereum, claims that the merge has not yet been fully priced in. Number two, there is so much speculation. Cryptocurrency values are often affected by this famous quote, "Buy the rumor, sell the news." People speculate on large price hikes as we approach a significant event like the merge. Unfortunately, it can devolve into a purchasing frenzy, driving prices to unsustainable highs. Traders then attempt to sell at a high when the much-anticipated event occurs. This in turn lowers the price. So don't expect Ethereum price to rise when the merge goes live. Number three, there could be unanticipated technical issues. Some likened Ethereum's merge to changing an airplane's engine mid-flight. It is not an easy task, and there may be technological difficulties. Ethereum engineers have tested and tested again, but no amount of practice will ensure a flawless launch when it comes down to it. For Ethereum investors, the hope is that the years of planning and testing will result in minor faults rather than anything more significant. Number four, the newly merged Ethereum may be regarded as a security. The way cryptocurrencies are classified can have a significant impact on how they operate in the United States. According to the SEC, many cryptocurrencies are securities and should fall under its purview. This would mean adhering to stringent guidelines for how information is released and traded. Most cryptocurrencies are presently considered commodities and do not need to go through the SEC's hoops. However, some lawyers say that the switch to proof of stake implies that the SEC is more likely to consider Ethereum a security. What effect will the merge have on gas prices? Sorry to burst your bubble, but it won't. Gas fees are the cost of completing an Ethereum transaction. They can increase during busy periods, like when an NFT project mints, potentially adding hundreds of dollars to transaction expenses. Unsurprisingly, Ethereum users are not pleased. However, because the merge has no effect on network capacity, users will not notice a change in this dynamic when the merge is complete. When will the merge happen? If it all goes as planned, Ethereum developers expect the merge to occur during the week of September 15, 2022. This isn't a promise, and given how long the integration has taken so far, it wouldn't be surprising if the Ethereum team delays it even further. Still, it's a beautiful time to participate in the crypto and NFT communities. Hopefully the merge will go down without a hitch, giving the Web3 community even more reason to rejoice and promote a positive environmental message, both within and outside its ranks. What is essential as a crypto investor is your long-term perspective on Ethereum. Short-term price swings surrounding a specific event becomes less important when you look at your investments over 10 or 20 years. The main question is whether the update changes your motivation for purchasing Ethereum and how well you believe it will perform in the long run. Don't let the news of the merge influence your financial decisions. Only you can decide how and whether Ethereum is a good long-term fit for your portfolio. So take your time researching the benefits and drawbacks, as well as considering your own financial circumstances. All cryptocurrencies are risky, so you should only invest money you can afford to lose. Ensure you understand the dangers involved with cryptocurrency and the individual asset you may invest in. I hope you enjoyed this video. Got any questions or comments for us? Kindly use the comments section below. We can't wait to hear from you. Don't forget to smash that subscribe button as we bring you more videos like this. Till next time, ciao.